All right, so this video that we're going to have right now is what we're attempting to do here is we're going to take a real quick walk through this entire process of determining a predetermined overhead rate, um, applying that overhead rate, recognizing actual overhead costs, uh, also recognizing movement between raw materials, work in process, finished goods, and ultimately cost of goods sold. And then probably the part of that with regard to cost of goods sold is we're going to look at reconciling variances uh, from the difference between applied overhead and actual overhead, reconciling that over into cost of goods sold. So what we have here on this first slide is just kind of a generic situation here, a generic scenario. We're using a single plant-wide overhead rate because I want to go through this process and I want you to see how everything works. But I don't want to overly complicate things with a drawn-out discussion on departmental rates. So here we have an example company that Johnson Leather Goods, and what they have determined here, kind of some small numbers, but they've said, okay, our predetermined, probably need to have the word predetermined over here, but our overhead rate is $9,600. This $9,600 is the amount of estimated overhead for the period, and says here that we're going to be basing our predetermined overhead rate on direct labor hours. We're estimating 2,400 direct labor hours for the period. So we execute the math on this and we come up with a predetermined overhead rate of $4 per direct labor hour. Okay, so just a very, very basic scenario here. All right, so what we have here is we have kind of a little snippet of an Excel spreadsheet, kind of a summary. And what we notice is we've got a few things going on here. We've got our actual overhead account over here in the upper left corner. And these are all of the actual amounts that we are going to incur during the period for lease, utilities, equipment depreciation. That's a non-cash expense, but nevertheless, it does count because it's on factory equipment. And then indirect labor, and that totals $415. Okay, now we've seen some examples with our job order cost sheet, and we know that we're going to ultimately be dealing with two different products here. But this applied overhead account is for all products combined. And so the fact that we're using a single plant-wide rate here really simplifies things. If we drop down to this column here, we've got our overhead rate of $4. And what we're saying is that in the amount of time that we incurred this overhead, we also had direct labor hours that totaled 85. Okay, so this might be for a month. These are very small figures, but that's okay. And we're saying in that same period of time, we had 85 direct labor hours. We multiply the 85 times our $4 predetermined rate, and we come up with applied overhead of $340. So as you can see, our amount of applied overhead is less than actual overhead. Further information, we have two different work in process accounts. We have jobs for our backpacks and also for our briefcases. And of course, our direct materials and direct labor are always going to be actual amounts. And then we also have applied overhead. So if we look at this, we've got backpacks, applied overhead of $240 and $100 for the briefcases. And if we were to add the $240 and the $100, it would come up to our $340 here. So we could kind of almost figure out here, let's say, okay, we had 25 hours on briefcases, and then 4 times 60 would be 240. So we spent 60 hours of direct labor here. 25 over here, and if we add those two numbers together, we get 85. Okay, so just a little bit of a run through here. And again, these are work in process accounts. Now, probably should have made this a little bit bigger, but if we look at this, we can see a couple of things are going on here. It says here, work in process before transfer of backpacks to finished goods. So what we have is a situation where our backpacks job is completed and our briefcases job is not completed. So we have the same costs, the 1,000, the 1,080, and the 240 of applied overhead, total cost of 2320. We made 20 units, and so we can determine a unit cost of $116. Over on the briefcase side, we have the exact same thing, but we stop at total cost. And the reason is that we have not yet completed these briefcases. Therefore, we cannot say to a certainty. Now, we know that we're going to ultimately complete 10. That was on the previous slide. I'll go back to that just for a moment if it will let me. Yeah, there's the 10 right there. But we're not yet done. So we don't have number of units here, and we don't have unit cost, because in theory, we could incur some additional costs up here somewhere. All right. So we've got backpacks that are complete and briefcases that are incomplete. So now we're going to have to split these off. Work in process now after the transfer of backpacks to finished goods is strictly made up of those costs from the briefcases job, because we only had two. The finished goods account had no balance initially, and now it is the full amount, the $2,320 that came from the backpacks job. So we had 2320 and 1,050, which is, let's make that a little bit smaller. We had 2320 plus 1,050. So we had a work in process up here of 3,370. That's no longer the case. Now we have work in process only of 1,050, and now we had finished goods of nothing. Now we have finished goods of 2,320. Okay, so here we have a schedule of cost of goods manufactured. We've talked about this in previous chapters. And we've got all kinds of information here about beginning raw materials and how many we purchased, and then how much we have at the end of the period. This is for the month of January, looks like. So we had raw materials available of $2,500. We still have at the end of the month $1,000. Stands to reason we used $1,500. 2,500 minus 1,000. Direct labor is very, very simple. We just calculate the amount of direct labor that we used, 1,530. So I'm going to actually bring this over here. So we used $1,500 of materials. We incurred $1,530 of direct labor. And then, although we have our actual overhead here of $415, we're going to use our applied overhead, $340. And if we do that, it says current manufacturing costs are $33.70. If you recall from our previous slide, we had initial work in process of two different figures. It was $23.20 and $1,050, and that did in fact come up with $33.70. And again, that is our current manufacturing costs. However, when we talk about cost of goods manufactured, we're talking about goods that are fully complete. So we have to subtract out from this figure the $1,050 for the briefcases job that was not yet complete. And if we do that, we end up with total cost of goods manufactured of $2,320. And in our particular case, that happens to represent the amount for the backpacks. So we've established that our cost of goods manufactured is $2,320. because we are making the assumption, and it may have told us this somewhere, but let's say that we actually did sell those backpacks. In other words, as soon as we were done with the manufacturing of those 20 backpacks, they were sold immediately. Okay, well, on that assumption, we would have our cost of goods manufactured for the backpacks of $23.20. That also happens to be our goods available for sale because we had no beginning finished goods inventory. We have now sold those, and we have our normal cost of goods sold at $23.20, and then we're going to add under applied overhead of $75. Okay, and the reason that we're going to do that is because the $75 is considered to be immaterial. So if we remember, we had actual overhead of 415 and applied overhead of 340. The difference was $75, and we're just going to roll that into cost of goods sold. Okay, we do, if this was a more complicated examination of the statement of cost of goods sold, it would actually be, not so important whether or not we had actually sold the backpacks, but in our case, where we're only looking at no beginning finished goods inventory and a very, very limited view of things, it is important for us to assume here that these backpacks were actually sold, so that we can actually have cost of goods sold. So our adjusted cost of goods sold, $23.95, which consists of, see if I can remember this now. I bet I can't. Let's see here. Go back over here. 1,000. So our cost of goods sold is going to be the $1,000 in direct materials plus 1,080 for direct labor. Again, this is only for the backpacks job. Let's see here. Plus $240 applied overhead, plus $75 for the underapplied overhead, and that is going to equal $23.95. $23.95. All right, so there you have it. I think that we will go ahead and finish this video off. So again, I was using, if you're in the class, I was using slides 39. Yes, slides 39 and 42 to do those final calculations there.